On the 29th of January 2020, this will be next Wednesday, and after the market closes for the day, we will know how much Tesla did in Q4 of 2019. This is what we are looking for, the next earnings call, the next earnings release, and therefore we will prepare everything what you need to know for the Q4 earnings. We will talk about what was the highlight of Q3, what you have to look into Q4, and what the market expects. So make sure to stay tuned, and here we roll. So before going further, and first of all, for daily vlogs, give me a thumbs up for this video, and we diving directly into it. Now, Q3 was a very specific quarter earnings for Tesla because it was so good. It broke so many expectations of Wall Street that the stock and the next trading day went up 20% and the day after 10%. So just in 48 hours after the Q3 earnings report, it was that the stock went up 30%. Now, of course, this is something that we want to see at Tesla investors again in Q4, and the delivery numbers of cars were already pretty much good and record numbers there, and there's some other factors that we will talk about now. So Q3 had a very interesting new layout how the Q3 earnings were presented. So we had this beautiful made presentation, and on the first pages were directly the highlights, of course, with $5.3 billion in cash, a cash pile that Tesla hoarded that was never done before. And this is a reason why this happened for Tesla, is because when they are selling the cars to customers, the customer have to pay once the car is delivered, and actually they are getting or have to pay the suppliers just 60 days after. This is something special what Tesla negotiated with the car manufacturers, suppliers, and that's why it's super interesting that they can, with time and upcoming months, they can build their cash pile bigger and bigger. Now, also what came to a big surprise was obviously the 342 income, and this was so unexpected that this was actually the number one reason why the Tesla stock went up like crazy. And also, of course, many short sellers was arguing over the last couple of months before the Q3 earnings that the margins will drop in the car industry, to 5-6% per car. But Tesla making more cars in the same facility, so they're using the capex much better, and also don't have to give 10, 20, 15% to dealerships. They can have a huge margin, and this was there in Q3. On the automotive margin, we had something about 22.8%, which is ridiculously high and very good. Obviously, also there was other highlights mentioned in the Q3 earnings report, like the Gigafactory was faster and ahead of schedule. The Model Y is faster and ahead of schedule, and also they showed some pictures in the presentation of the Gigafactory in China, which showed that they are already operational just after 10 months after the groundbreaking of the area where they built it, which is just ridiculously, and shows again how fast Tesla is entering the market. So what is really important for the next Q4 is the exact same numbers that we just talked about. For sure, we need to see how the cash pile of Tesla, the $5.3 billion, really move forward in the next Q4, if they could hold this or increase it. Obviously, they had some expenses now for maybe already the Gigafactory in Germany, as well as the Gigafactory in China. But also obviously they had some more and more sales. They also sold a lot of inventory cars towards the end of the year because there was just so many people that wanted to buy cars, and there was literally no cars available at any dealers or any outlets because the Tesla don't have dealers. So at any outlets or inventory stock was all gone because the tax credit in US, for example, reached, and the Netherlands had the same issue that the tax credits are getting finished by 2020 or reduced, and therefore there was a huge demand on Tesla cars in the Q4. Moreover, it's very important to see how much profit Tesla can really make. I mean, I believe, and I strongly believe, then the percentage is maybe at 95% that Tesla is recording another profit for this quarter. Obviously they can surprise if they can beat the profit of the last quarter, and which we will dive in a second. So make sure to subscribe to this channel if you are looking for daily vlogs about the stock market, stocks, and Tesla, as well as I'm a big Tesla investor, or my portfolio is made of big percentage of Tesla. So therefore I'm vlogging about this company since the summer, and if you are listened and subscribed to this channel, you already know, and congratulations, maybe you already become a millionaire by listening this kind of advices that I'm putting here totally for free. Now, the most important part, as I said, is that really Tesla is doing a bigger profit. This would fuel the stock price. Fueling is maybe not the right word for an electric. Maybe electrify the stock price more higher for Tesla, and this would be a very big surprise. And also I'm very curious for the next quarter earnings report and presentation and investor update and earnings call, how much new shares are going out, because this is something that you also need to look for, that if more and more shares are on the market, that's, you know, not that great. It's nothing like crazy catastrophic, but it's not so good for the stock overall, because in the end also the earnings per share, you know, will be negative affected by more shares going out there to investors. However, let's dive in what happened in Q3, what was expected, what was the beat, and what we can expect it, and also what the market expect from Q4. So this is very important that we speak about the expected numbers, or whisper numbers, how they called on the market. These are actually, you know, the average expected. Analysts putting expectations, they make some models, and every analyst is putting out a different model, is calculating different, have different assumptions, have different numbers that he's based on. So it can vary from website to website. There's ZEX, you know, there's NASDAQ, there's other companies that are putting estimates, and lots of analysts from different banks. So you can see it can go, you know, the expectation for Q4 revenues, for example, from 6.5 to 7.5 billion dollars. So a huge difference that people or analysts assume. Now, the expected whisper numbers in Q3 was actually $6.3 billion, and released was $6.33 billion. So on this number, on the revenue number in Q3, Tesla delivered and brought out great numbers out there. The income, and this was the deal breaker actually for Tesla to, you know, move 20% the next day, and again 10% the next day, because the market expected that Tesla make again a loss of $77 million, and actually they came out and said, you know, we did a $342 million income, positive income. This was you know, because of cost savings, because of efficiency, because, you know, this gigafactories and everything was already built, and then, as Elon Musk said, you know, once it's built, you can produce so much cars and the capex stays the same or even becomes lower. Also, Tesla is very eager to reduce their capex over the next couple of years, because this was also, you know, a negative for Tesla to have so much capex. This new CFO put himself together with Elon Musk and said, you know, he will look into every single cost of the company to reduce it, to make it more efficient. And therefore, you know, it was so good to see this kind of numbers. And calculated by the EPS, this is earnings per share. So actually what you do, or what everybody does, how this is calculated, is taking the income and divided by the numbers of stock. In this case, it was something around 186 million shares, which was then the expected whisper. EPS was at negative 42 cents, and actually they came up with $1.86 per share as income, positive income. This was incredible. Now let's dive into the Q4 expected numbers. I have researched a couple of sites and expectations there, and as I said before, analysts are saying anything between 6.5, 6.3 to even 7.5 billion dollars. So there's a huge difference what analysts thinking about how much revenue there will be in Q4 to report. But actually I believe that because the leasing number was also lower than the Q3. So in the Q3, leasing number of cars was around 9.3% of all cars delivered was leasing. Therefore, the money don't come 100% as revenue per se, but over a specific timing. But in the Q4, we have seen already that the leasing number goes back to 8%. So this should help to have more revenue. And therefore, I personally believe that the revenue will be maybe somewhere around 7.1, around 7ish, but definitely not 6.3 or 6.4, 6.5. I think will be somewhere around 6.8, 6.9, 7, and everything more than 7 will be obviously fantastic. The expectation of income is positive. This is without a question. Now, the 316 would be below the revenue or the income of the quarter before, because the cost of Gigafactory in China went into the fourth quarter, or partially, even when it's just some interest on the loan that Tesla got on and for the Gigafactory, but still there should be some cost for that. And also, if we are looking into the EPS, it's lower than obviously that the quarter before, which is fantastic, because if the expectation is lower or good beatable, then the beat can be quite positive for the stock. And therefore, you know, this is something, these numbers are really surprising me that they are so low in terms of income, and this can really be crushed very easily. And therefore, let's rock it on next Wednesday after the market closes, and for sure you will hear it here as well, and as I will make a full analysis of these numbers that will come up there. So thank you for watching, and see you tomorrow.